Hi, I'm Bobo. In this week's recap, Hong Kong's annual budget is set to be delivered on the 28th of February, with Financial Secretary Paul Chan Mo-po reported to open up new revenue streams for the government. Capital gains tax is one such area that has aroused market concern. The UK and Australia have also set up relevant property taxes. However, there are exceptions. The capital gains tax in the UK and Australia only apply to rental properties. For instance, in Australia, if you sell a rental property as long as the home is held for more than 1 year, the tax can be reduced by half. As for Hong Kong, it's unclear whether this tax will be implemented for the time being, as housing prices have now returned to levels seen in 2017. Therefore, it's expected that only homeowners who have held their properties for over 10 years will be affected. Take, for instance, the case of a recent transaction in Tai Kwu Shing. A 3-bedroom apartment measuring 748 square feet sold for 12.75 million Hong Kong dollars. The original owner bought the flat back in 1996 and held it for nearly 28 years, making a huge profit of 7.42 million Hong Kong dollars. However, if we factor in the UK's highest capital gains tax rate of 28%, the original owner would have to pay 2.07 million Hong Kong dollars in taxes for the sale. It's expected that the introduction of taxes may lead to panic selling. Financial Secretary Paul Chan said the effects of capital gains tax on market competitiveness would be reviewed. Next, following the government's suspension of residential and commercial land sales, Secretary for Development Bernadette Linn Hon-ho said the city would put smaller sites up for tender to revive land sales. Amid an uncertain market outlook, major developers slowed the launches of new developments. Meanwhile, small and medium-sized developers are speeding up sales of new flats. The project Phoenix in Wong Tai Sin took the lead, launching its first round of sales over the weekend. The project received a decent response. Among the 165 available units, about 96 units were sold, which is about 60% of the available units. Following this, Lofter Group will be revealing show flats for its project at Lee's Park this week at the earliest. Sales are scheduled to start before Chinese New Year. The project features a total of 52 units, with 1-bedroom units ranging from 240 to 245 square feet in size, and 2-bedroom units from about 325 to 345 square feet. Looking at the first-hand market, driven by sales of Phoenix, a total of 112 transactions were recorded in weekend deals, marking a 6-time increase week on week. Phoenix alone accounted for 85% of this weekend's first-hand transactions. The remaining deals came mainly from leftover units of new projects including Yoho West in Tin Shui Wai and the Coastline in Yau Tong. Turning to the second-hand market, as the market focused on new projects, weekend transactions declined across the board. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded 6 to 10 deals for the city's top 10 blue-chip housing estates. Among them, Midland recorded about 10 transactions, dropping 40% week on week. Despite a modest improvement in market sentiment, the property market remains volatile, with buyers exhibiting increased caution when entering the market. As such, homes with significant price reductions remain the most attractive to potential buyers. Let's explore 3 cases of such properties. At Newtown Plaza in Sha Tin, a 3-bedroom flat was sold for over 2 million Hong Kong dollars. This was an upper floor unit measuring 876 square feet. With an initial asking price of 17 million Hong Kong dollars, the price was reduced to 14.67 million Hong Kong dollars at about $16,750 per square foot. The original owner bought the flat in 1997 for 8.25 million Hong Kong dollars, making a sizable profit of about 6.42 million Hong Kong dollars. Next, at Royal Ascot in Fo Tan, a 2-bedroom unit was sold at a price reduction of 420,000 Hong Kong dollars. This was an upper floor unit in Block 3, measuring 594 square feet. With an initial asking price of about 7.8 million Hong Kong dollars, the flat was eventually sold for 7.38 million Hong Kong dollars at about 12,400 Hong Kong dollars per square foot. The original owner bought the flat for 9.9 million Hong Kong dollars in 2018. Holding the flat for 6 years, they lost about 2.52 million Hong Kong dollars. In our final case, another owner who also held their flat for 6 years made a huge profit. At Heng Estate in Shan, a two-bedroom apartment measuring 488 square feet was initially listed for sale at 2.65 million Hong Kong dollars. Despite a price decrease of only 250,000 Hong Kong dollars, this was still a reduction of over 10%. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.